This is again a 6 marks question, calculation of quick ratio and current ratio. So current ratio is equal to, they've asked you to calculate current ratio and quick ratio for the following information. So current ratio is equal to current assets divided by current liabilities. Okay, what you need to do is identify the current assets from the question, to sum it up, total it and write here. The same thing, identify the current liabilities, total all that and write here and find the ratio. This is current ratio. Now the next ratio which we are going to do is, they've asked for quick ratio. So quick ratio is also called as liquid as ratio. It is called as quick ratio, liquid ratio, or acid test ratio. So depending on what is asked, so if they ask quick ratio, you will write the numerator as quick assets. If they've asked liquid asset, it will be, liquid ratio, then it will be liquid asset. Okay, so quick asset or liquid asset divided by current liabilities. Okay, so I repeat, quick ratio is equal to quick assets divided by current liabilities. Okay, now let's find out current ratio first. Now from the given information, please I first of all identify what are the current assets. I told you current assets are those assets which can be converted into cash within a period of 12 months. Okay, so you need to identify the current assets. So basically your current assets will be your inventory, which is also called as stock. Then you have bills receivable, debtors, your short-term investments, that is your current investments. When they mention it's current investments, then any kind of advance tax, prepaid expense, your cash, all such items your current assets. So I repeat, inventory, bills receivable, debtors, investments, current investments, advance tax, prepaid expenses, cash, all such items are called current assets. Now what are current liabilities? What will come under current liabilities are your bank loan, bank overdraft, okay, any kind of loan, your creditors, bills payable, which can also be given as trade payables. Okay, same thing here, bills receivable and debtors can be given it as one called trade receivables. So creditors and bills payable can also be given as trade payables. Okay, then any kind of dividend proposed dividend or proposed taxation for anything, any kind of provisions also will come. Okay, proposed dividend, any kind of provision, okay, will come under current liabilities. Now from this question we will take what and all are your current assets. Now stock I told you it is a current asset. Okay, so let's first calculate current assets. So current assets is equal to, what are the items in your question? Now current asset is what? Current asset is what? Your stock is what? Current asset, which can also be given as inventory in the question. Okay, so stock or inventory is your current asset. Debtors, current asset. Bills receivable, current asset. Advance tax is again a current asset. You're paying your tax in advance, so it is a prepaid expense, which is an asset. Cash, again current asset. Okay, now creditors is a current liability. Bills payable, current liability. Bank overdraft, current liability. Okay, now all that I have to do is total all the current assets, total all the current liabilities, substitute in the formula. Now current assets are what here? Stock, which is 50,000, plus bills debtors, which is 40,000, plus bills receivable, which is 10,000, plus advance tax 4,000, plus cash, which is 40,000. Okay, now what did I do? I've just totaled all the assets. I mean, I've taken all the current assets, stock, debtors, bills receivable, advance tax, cash. So total all this. So when I total that, I get 1,44,000. Okay, this is your current assets. Now find the current liabilities similarly. Now how do I find current liabilities? Take the total of all your current liabilities, that is these three: creditors, bills payable, bank overdraft. So creditors is 60,000 plus bills payable plus bank overdraft. Okay, so bills payable is 40,000 plus bills bank overdraft is 4,000. Okay, now I need to find current assets. Now how do I find current ratio? As I said, current ratio is equal to current assets by current liabilities. Okay, now what is your current asset here? 1 lakh 44,000. Your current liabilities, when I total this, I get 1,04,000. Okay, so substitute here 1,04,000. Very simple. Take your current assets total divided by your current liabilities total. So that will give me, the ratio is 1.38. Okay, because it's current ratio, I said you will always write is to 1. And I've explained why do we write. See, I'm not explaining in depth or the meaning or the concept or the logic behind each of the sum in these videos. It is just for your for people, just to help you all to have a recap or understand the thing. So I'm not explaining in depth or explaining the concepts here. So 1.38 is to 1. So this is your what? Therefore current ratio is equal to 1.38 is to 1. Okay, yeah. Next, now I need quick ratio. For quick ratio, what do I need? Quick assets divided by current liabilities. Now how do I find quick assets? Quick assets is nothing but your current assets minus stock or inventory. Both are the same. Okay, inventory or stock minus prepaid expense. Okay, prepaid expense minus advance tax, which is one and the same. Okay, now current assets, what is your current asset? You've already found out to be 1,40,000 minus stock. What is your stock in the question? 50,000. So minus 50,000 minus prepaid expense. How much is your prepaid expense in the question? Prepaid expense is nothing but your advance tax. How much is your advance tax? 10,000. 4,000. So it can be advance tax, it can be prepaid insurance, prepaid salary, all such items you will minus here. Okay, so 1,44,000 minus 1,44,000 minus 50,000 will give minus 4,000 will give me, how much is it? 90,000. So your quick assets is 90,000. Now what will I do? Quick assets by current liabilities. You already know current liabilities, which is 1,04,000. Now quick ratio is equal to quick assets divided by current liabilities. Okay, now how much is your quick asset? You found it out to be, you found it as 90,000 divided by your current liabilities. How much is your current liability? CL is nothing but your current liability, which is 1,04,000. So when I divide that, I get 0.81. Okay, so because it's ratio, I said you will write is to 1. Therefore your quick ratio is 0.87 is to 1. Okay, so this is your quick ratio, this is your current ratio. So very simple. It is like most probably this question can come. So current ratio is equal to current assets by current liabilities. Now how do I find current assets? From the questions, take all your current assets, total it, that will give you your current assets. So in this question we had stock, debtors, bills receivable, advance tax, cash as current asset, totaled it. Then your current liabilities is nothing but all your current liabilities like creditors, bills payable, bank overdraft. Total that you get 1,44,000. 1,44,000 divided by 1,04,000 will give my current ratio. Okay, now quick ratios, quick assets by current liabilities. Now how do I get quick assets? Your current asset minus stock minus prepaid expense minus advance tax. Okay, now current asset, you already found out your current asset 1,44,000. From that, minus stock or inventory minus your prepaid expense or advance tax, that will give you 90,000. Substitute in the formula. Quick assets by current liabilities. So 90,000 divided by your current liability, which is 1,04,000. So when I do it, I get 0.87:1.